A budget without tracking is a plan without feedback. You can allocate every dollar perfectly on paper at the beginning of the month, assign amounts to every category, and feel completely organized, and then arrive at the end of the month with less money than the budget predicted and no clear explanation for where the difference went. That gap between the plan and the reality is exactly what expense tracking is designed to close. Tracking your expenses means maintaining an ongoing record of what you're actually spending in real time or close to it, and comparing that record against your budget to see where your behavior aligns with your plan and where it diverges. Without that comparison, a budget is just a document. With it, a budget becomes a functional feedback system that improves your financial decision-making over time. The mechanics of expense tracking are straightforward. Every time money leaves your account, whether through a debit card purchase, a credit card transaction, a cash withdrawal, an automatic payment, or an electronic transfer, that transaction gets recorded in a category. At any point during the month, you can see how much you have spent in each category relative to what you budgeted. If you're 60% through the month and have already used 80% of your dining out allocation, you know before the month ends that you are on a trajectory to exceed that category. That advanced visibility is what makes tracking actionable rather than just informational. You can make a course correction while there is still time to make one, rather than discovering the overage after the fact. There are two primary approaches to tracking expenses: manual tracking and app-based tracking. Manual tracking means recording transactions yourself, either in a spreadsheet, a notebook, or a budgeting template. You review your bank and credit card statements regularly, categorize each transaction, and maintain a running total for each budget category. Manual tracking is time-intensive, but gives you complete control over how transactions are categorized and keeps you closely engaged with your spending. The act of manually recording a transaction creates a moment of awareness that automated tracking does not. Some people find that this friction is valuable because it makes spending feel more deliberate. When you know you have to write it down, you think slightly more carefully before you make the purchase. App-based tracking connects directly to your bank accounts and credit cards and imports transactions automatically. The app attempts to categorize each transaction based on the merchant name and transaction type, and you review and correct the categorizations as needed. Popular budgeting apps like Mint, Inab, and Personal Capital fall into this category. App-based tracking is significantly less time-intensive than manual tracking because the import process is automated. The trade-off is that automatic categorization is imperfect and requires regular review to catch miscategorizations. An expense at a store that sells both groceries and clothing, for example, might be categorized differently depending on the transaction description, and getting the category wrong defeats the purpose of the tracking system. Regardless of which method you use, the most important habit is consistency. Tracking that happens sporadically, or only when you remember to do it, produces incomplete data that distorts your picture of your spending. A transaction you do not record is money that disappears from the system without explanation. The goal is to capture everything, which requires either checking your accounts regularly enough to catch every transaction or using a system that does it automatically. Many people who commit to tracking find that the first month of consistent data is the most revealing experience they have had with their own finances, because it surfaces patterns they were not consciously aware of. One of those patterns, and the one that deserves its own dedicated discussion within this topic, is subscription creep. Subscription creep is the gradual accumulation of recurring charges over time that individually seem small, but collectively represent a significant and often invisible drain on your monthly budget. The structure of subscription services makes this problem particularly easy to develop. Each new subscription requires only one decision to start, and then it bills you automatically every month or every year without requiring any further action on your part. There is no moment of repeated commitment. The charge just appears. And because each individual subscription feels small when you sign up, the true cost of the full portfolio of subscriptions you're carrying tends to go unexamined for long periods. Consider the math. A streaming video service at $15 per month. A music streaming service at $10. A cloud storage plan at $3. a news publication at $12, a fitness app at $8, a meal kit service that you signed up for during a promotion and forgot to cancel at $45, a software subscription that auto-renewed at $30 annually, an audiobook service at $15. Add those up, and you have $138 per month in subscription spending alone, which is over $1,600 per year. None of those individual amounts is alarming on its own. Together, they represent a meaningful portion of many people's monthly budgets, and many people carrying that level of subscription spending are not consciously aware of the full total. The mechanism that makes subscription creep so effective is the combination of automatic billing and gradual accumulation. When a new subscription is added one at a time over months or years, the total never feels like a single decision. Each individual addition felt justified at the time. The net result is a portfolio of recurring charges built up over time that does not reflect your current priorities, usage patterns, or financial situation. Free trials are a particularly effective vector for subscription creep because they require active cancellation to avoid converting to a paid subscription, and the trial period is often designed to end at a moment when you are busy or distracted. The default if you do nothing is that billing begins. Auditing your recurring charges is the corrective process for subscription creep, and it is worth doing at least once per quarter. The process is straightforward. Pull up your bank and credit card statements for the past 2 to 3 months. Identify every recurring charge. List the service, the amount, and the billing frequency. Then evaluate each one against a simple standard. Are you actively using this service? And is the value you're getting from it worth the cost relative to your other financial priorities? This evaluation should be honest. Services you signed up for with good intentions, but rarely use, services you keep meaning to cancel, but have not, and services you forgot you were paying for should all be on the cancellation list. The friction of canceling is almost always lower than the cost of continuing to pay for something that is not serving you. It is also worth setting a personal policy around free trials going forward. Before signing up for any free trial that requires a payment method, decide in advance whether you actually intend to continue the subscription after the trial ends. If you're signing up primarily for the trial and plan to cancel, set a calendar reminder for several days before the trial expires so the cancellation does not slip through. Some people make a habit of using a separate payment card for trial signups so that all trial-related charges appear in one place and are easier to audit. None of these measures are complicated. They are simply habits that prevent a common pattern of low-visibility spending. The broader principle behind subscription creep applies to other categories of recurring spending as well. Gym memberships you're not using. Insurance policies whose coverage you have not reviewed in years and may be overinsuring. Membership fees for organizations you are no longer actively engaged with. Annual fees on credit cards whose benefits you are not utilizing. Any recurring charge that bills automatically without requiring a renewal decision is a candidate for this kind of periodic review. The automatic nature of the charge is exactly what makes it invisible, and visibility is what the review process restores. One practical system for staying on top of recurring charges is to maintain a simple list, updated monthly, of every subscription and recurring payment you have active, along with the amount and billing date. This can be a single page in a notebook, a tab in a spreadsheet, or a note on your phone. The list does not need to be elaborate. It just needs to exist because what gets tracked gets managed. When you see the full picture of your recurring spending in one place, you're in a position to make deliberate decisions about it. When those charges are scattered across multiple cards and accounts and billing dates, they exist below the level of conscious attention, and that is where they do the most financial damage. Combining consistent expense tracking with a periodic subscription audit gives you a complete picture of your spending, both in the moment and over time. The tracking handles the day-to-day flow of money through your budget categories. The subscription audit handles the persistent background layer of recurring charges that most budgets undercount. Together, they close the most common gaps between what people think they are spending and what they are actually spending, and that gap is almost always larger than people expect when they look at it honestly for the first time.